and welcome to VCCircle Podcast. I'm your host, Joseph Rai. In this podcast, we will be in conversation with Anirudh A Damani, Managing Partner of Artha Venture Fund, which is an early-stage venture capital firm backed by Singularity Holdings and the family office of former BAC Director, Mr. Ashok Kumar Damani. Artha is raising its debut fund of 200 crore rupees. It has already marked a second close and invested in 6 companies, such as peer-to-peer lending platform, Lendin Club, sports portal, Kabaddi Adda and Dalchini, which operates vending machines that offer home-cooked food and snacks. Hi Anirudh, a warm welcome to you and thank you for joining us.
Hi Joseph, thank you so much for the warm introduction, and I'm really excited to be on your podcast. I've been listening to it, cool. And I've been looking forward to this. So please go ahead.
Cool. So before we talk about your fund, tell us how Artha is engaging with its existing portfolio companies in the face of the coronavirus pandemic, and what are some of the advice that you've been giving to them?
So Joseph, one of the things we did is because at least my personal portfolio has more of a global feel to it, right? We've got almost 25% of the portfolio when I was running the family office from US. Right. And some investments also out there in Israel. And then if you look at Vinod, who's the growth partner in the fund, he's also got probably about 30% of his portfolio in the US. We started getting a lot of indications very early that something was about to go grossly wrong, right? Otherwise, also, we had informed our LPs through our monthly newsletter that, we thought that 2020 was going to be a down year any which ways. But we were excited about that because, since 2011, I've been through 3 downturns, I think, in the VC ecosystem, and all 3 of them have been very profitable for us because, we've always had the money or liquidity at the time a crisis has started, and we've always found great opportunities to invest, right, during that time. And I did think that in 2019, maybe even the end of 2018, the market was getting very overheated, right? Today we are doing as many deals in a week as an ecosystem. We were doing more deals by noon in that time, right? Like we would have 10 deals announced, by 12 o'clock or 1 o'clock every single day. So we thought that the market was overheated. We, traditionally, as investors, we made 1 investment a month, right? That's been our average. But in the last year or so, we've only made about 1 investment every 2 months or 3 months because the valuations were not making sense for us. So we were actually very excited, and we had told our LPs that while we not deployed a lot of capital in 2019, we were really looking forward to 2020, where we would make a bulk of the investments for the fund. Unfortunately, no one predicted that Corona was going to come, and it obviously threw off our plans. We were in the middle of, I think, 6 or 7 deals, which were either at a term sheet or a IC stage, and we had to go slow on that. Okay. But we had to go protect the portfolio first. And so what we did was, between Vinod and I, we took all the experiences we've had of dealing with downturns, either as public market investors or private market investors, and we put together a 21-point action plan for all our companies. Right? Okay. We got some of the experienced entrepreneurs, that were getting advice from, like the big investors, right? Like your Sequoias and people like that, who we had backed in the past or who we knew very well, to give a closed door pep talk in a way, and a plan and an AMA to our founders, right? And then we prepared this 21-point action plan from the advice that was being given, and then we shared that with all our founders, right? Okay. And that, it covered everything from financial management to revenue management to expense management to even fundraising, right? And after our companies already got it, we felt that this was. It was selfish not to share that with the entire ecosystem. So I actually uploaded that on SlideShare, and then we did a webinar on this, and we shared that action plan with everyone. And it was very well accepted. We had a pretty high number of people that joined that webinar. And and basically, I think what it really said was that everything is temporary, right? That this too shall pass, right? But what's important is, because of the severity of the lockdown, that we should be prepared to write off any revenue till July. Okay. Right. And we announced this, I think, way back in March, that till July, don't expect anything to happen. Right. So before the country was really in lockdown. And then we said that what you should expect is 3 scenarios from July onwards. One is going to be your worst case, and one is going to be your best case. Your best case is going to be that you'll be at 40% of Feb revenues. Right. So Feb is already a short month. Imagine 40% of that. And from there, you'll be growing, let's say 10% month on month. That's the best case scenario, which means it would take probably till March of next year before you get to last year's Feb revenues, right? So, and the other, the medium case scenario was 30%, and the worst case was 20%. But the worst case also said that it was going to be 20% with a 5% growth month on month. So it would take almost 18 months before you would, reach Feb 2020 numbers. And I think in many ways, because we were so pessimistic and we reworked the budgets based on this kind of a stress test, right? I would say almost 90% of the portfolio is performing better than what they had predicted for themselves.
Okay. All right.
So they're actually better than the best case. Because obviously, you when you think of the worst, you tend to overestimate, right, how bad it's going to be. But that's a good thing, right? Because they cut excess staff, they cut any kind of discretionary spending. They reworked a lot of their fixed variable expenses, and also in many cases also found ways to collaborate, because we had an entire section on how you can even grow the company during a downturn, right? So they found ways to reach out to people who would have otherwise not been available, or rope in advisors, rope in partnerships, things like that. And so I think most of the companies have come out much stronger, much leaner, and thankfully a couple of them have actually raised rounds during the downturn at a higher valuation than the previous round, which is very heartening for us, because obviously people, there was a saying that if you raised a flat round during the downturn, it was equal to a 3x valuation, a jump, prior to the downturn. However, if in the downturn we were able to raise around at 2x or 2.5x or even 3x where we invested, it just tells you the kind of strength these companies had that investors want to back. And so I know it's a bit of a long-winded answer, but yeah, we've come out and we've really found that this has separated the men from the boys, per se. And I think the companies are going to come out of it, and when this thing finally tides over, you'll find stronger companies, better entrepreneurs, and more dynamic business models.
Okay, so you're talking about the investments that you've made from your funds. If you could tell us about some of the portfolio companies that are seeing tailwinds because of the pandemic, and are there some companies in the basket which you are slightly worried about?
So I'll talk about the ones that I'm a little bit worried about today. But more so because there's no clarity on when things are going to restart. I think we have a company in our portfolio, Jadu's Media Entertainment, right, which is creating these small mini theaters.
Mini theaters, right?
Yeah, in tier 2, tier 3, tier 4 towns. That one I'm a bit concerned about because I'm not really sure when theaters are going to reopen. I still believe that if they can survive the next 6 to 9 months, and if there is a vaccine, or if there is a community spread, and the models that say at some point the entire population will get it, and then you'll have no issue with corona at all. I think if that situation happens, 6 to 9 months, if they can survive, there's a good future for them, right? Because movie watching is not going to stop in this country, or any country for that matter. I think that one I'm most concerned about. Just because it's a very communal, it's supposed to be a very communal thing any which ways, right? Or a very community-led thing. And so obviously that's the one that's most affected. But I think the other ones are doing very well. In fact, we had made a 7th investment right before the lockdown in a company called Agnicool, right, which is a nano satellite delivery startup.
All right.
And that one's doing extremely well. In fact, they found some amazing partnerships during the lockdown.
Wanted to talk to you a little bit about your fund and the fundraising in a process. You made the second close last year. Where are you now? How many miles do you need to cover more before you announce another final close?
So we were on track to probably do a final close by June. Our timelines obviously have been thrown off. We've not traveled. A lot of the investors we were talking to were institutional investors from Japan, China, and even the Middle East, US. But unfortunately, we haven't been able to travel. So that those have been thrown off a bit. So, but I would expect that we probably get our final close by December if things continue to improve as they are right now. There's a lot of liquidity being pumped in around the world, And a lot of that is going to come to India because there definitely is an anti-China sentiment right now.
Okay.
But I think what it's also going to do is that we're also going to might be able to dip into that green shoe option that we have,
All
and
right.
probably overshoot our fundraising target.
Okay.
So we're probably going to try to raise 300 instead of the 200. So that's
All
the
right.
plan moving forward.
Okay. That sounds great. So which means, do you have some soft commitments as of now?
So we've got enough commitments right now
Mhm.
to get to our 200.
Okay.
I think the market is just starting to warm up again. As you can
All
see, the
right.
Sensex and everywhere you're starting to see some of the effects of liquidity.
Mhm.
But we haven't, again, a lot of the people were on the tenterhooks waiting for unlock one, unlock two to happen. So I
Mhm.
think we'll start seeing money flowing in from July onwards.
Okay. Okay. And a lot of VCs we spoke with said that, they are they are in a wait and watch mode. Even some of the VCs which have just raised a new fund or announced a milestone in their fundraising process. What is Artha Ventures, strategy out there? Do you expect to slow down your investment pace?
Actually, Joseph, honestly, we're not looking to slow down, right?
Okay.
We are being very cautious. In
Mhm.
fact, I was hosting a webinar last night,
Mhm.
and I think the overall sentiment was that this is a great time to find investments, but to go slow on the investment part, right?
Mhm.
So, because honestly, we've never actually faced an event like the one we are facing right now in the last 30 years, I would say, right?
All right.
And so obviously, we don't exactly know how this is going to play out.
Mhm.
However, I still feel that many companies haven't reset their funding compass, right? They're
Mhm.
still quoting valuations as though there was no lockdown. Uh,
Okay.
and I think that is definitely a bit concerning because
All
it
right.
seems to me that there may be over-optimism still in the entrepreneur that everything's going to come back to normal. But I
Mhm.
think there's a long road ahead. I think it'll take at least a year and a half before before we have a full recovery.
Okay.
And so, in a way, we don't want to also over leverage by investing too early, right?
All right.
I think in the next 12 months we should be able to do at least 15 investments, if
Mhm.
not more.
Okay.
But again, we don't want to we want to sort of pace ourselves, and once we feel that the market is reached some sort of a bottom, then we'll really go aggressive and try to ramp up to about 2 deals a month kind of stuff.
Okay. And so, what are some of the themes that you would be actively chasing?
I think we're going to go after consumer for sure. I think consumer discretionary spending, although hit for the last 6 months, you would say, probably for
Right.
the next quarter as well, it's definitely going to come back. I think
Mhm.
domestic travel definitely is going to be a big thing moving
Okay.
forward. I think
Mhm.
there'll also be a big move from cost to
Mhm.
value, right? And
Mhm.
to hygiene, right? I think those things are definitely going to be the themes moving forward. We want to
Okay.
start getting in front of that wave. I think B2B also has a big potential moving forward. Obviously, a lot of MSMEs and SMEs have been hit very hard, right?
Mhm.
So instead of trying to increase fixed expenses, I believe they will start getting more digital. You're already seeing that because of the lockdown that is happening, and
Mhm.
there'll be more digital solutions, right?
Mhm.
So I would say that any company, any B2B startup that is either reducing the cost of operation or reducing the cost of sales and marketing, and increasing the ability for companies to market their products globally or even
Mhm.
nationally for that matter, those are the kind of companies that will do very, very well, right?
Mhm. Mhm.
I think those two themes I'm very, very uh, keen at exploring. And in fact, we have a couple more investments announcements will be made shortly where we are pursuing those kind of themes.
Okay. Okay.
I will add one thing though that we're most likely going to change. I mean, at least my thesis on edtech and health tech has changed simply
Okay.
because of the way this pandemic, sort of has uh, has condensed the timeline, right?
Uh-huh.
I would have earlier thought that online education, outside of Byju's,
Yeah.
where teachers are actually imparting education at schools and colleges through an online medium would have been at least 5 to 10 years away in India, right?
Mhm.
But because
Mhm.
of the pandemic, I think we're seeing those solutions and digital solutions getting adopted today itself, right?
Right.
So I think those kind of themes we would start making some exploratory investments, like telemedicine, for example.
Mhm.
I saw a lot of telemedicine startups in the last 3 or 4 years. I always believe that telemedicine was going to be 10, 12 years away in India, right? So we're still a very much a touch feel kind of a population, right? When it comes to our medical stuff. Other than that, I think, like I said, consumer and B2B continues to be a major focus for us.
Okay. And finally, I wanted to understand whether any one of your existing companies from the fund are raising a new round, or are you doing a follow-on solely into some of these companies along with other existing investors?
So Dalchini is doing a follow-on round right now, almost completed.
Okay.
And Lane Club is going to do a follow-on round, like a small bridge round.
Mm-hmm. Okay. And at what sort of valuation? Give me a sense.
Both of them have been able to get good valuations, higher than what they got last time. And in fact, interesting, both of them have been able to raise the round very quickly. So it wasn't like a round that was open for weeks and months. It's just been like they got board approval, and within 10, 15 days, they were able to, raise all the money. So but essentially what Dalchini and Lendin are trying to do is they're trying to add a new feature or a new product to the pipeline and sort of augment their revenues during the downturn. So that's what they're working on.
Cool.
And that's what the raise is for.
I think there's a lot of activity happening, at your portfolio companies.
Absolutely. I think, like I told you earlier, because of this downturn, you see, a lot of experience capital, right? Is available because people, the people aren't traveling, right? So they have a lot more time, and we're able to reach out to these people and get them to talk to our entrepreneurs. And our entrepreneurs are able to use them as sounding boards, and they can be a good confluence over there, right? And this is, I think, if there is a silver lining to this entire economic lockdown and this working from home, is the fact that this experience capital is now available for everyone. And any startup out there, any founder listening to this, it literally, even for us as when we are fundraising, we've been able to reach out to MDs of listed companies that are worth 2,000, 3,000 crore through simple emails because they are sitting at home and they're going to listen. So go out there and cold call and get that one person we really wanted to talk to, because he's definitely available right now.
That sounds very interesting. So we'll have to wrap up the podcast. It was great talking to you, Anirudh. Thanks for sharing your thoughts and insights. And that's all we have in this edition of VCCircle Podcast. Thanks for listening, everybody. Goodbye and take care.